target price of 2,212, indicating an upside potential of 51%. Tata Steel is another counter buzzing in trade today. The stock was up 4.5% on the back of robust Q2 production and sales data. Overall sales grew by as much as 16% to 6.4 million tons, while overall production grew by almost 5% on a year-on-year basis. Vedanta is another stock we have on our radar. The stock is up about 2.5–3%. On the back of zinc prices hitting decade high levels. The price for the metal hit the $3,300 per metric ton mark on Wednesday, which is the highest since 2007. And lastly, ahead of the weekend, we have Pincon Spirits. The stock is locked in a 5% upper circuit after the company announced that it has tied up with the retail outlets of Metro Cash and Carry for the sale and distribution of its edible oils.
Well, Yash, thanks for that, for bringing all the Fab 4 stocks of the day. But let's just revisit the markets. Currently, Nifty is at about 99.60. We've seen good gains. Also, some sort of strength actually coming back for Bank Nifty after the weekly options expiry day yesterday. And it is the PSU banking lot which is doing good. But one stock which has been outperforming is GAIL, and we will be discussing that stock. But for the time being, let's try and go across to our guest who will be just joining us shortly. We're joined by, well, first let's talk about the recent market rally, which has not convinced a great deal of analysis. According to Emkay Global, in its report, they have mentioned that markets are distorted in context to its fundamentals, especially the mid-cap index, which is trading at an over 40% premium to benchmark indices like Sensex and Nifty. So let's go across and discuss the report in greater details with Mr. Dhananjay Sinha, who's the head of research at Emkay Global Financial Services. Hi, Dhananjay. Good afternoon to you. And thanks very much for joining us today on Bloomberg Quint. Well, clearly, everybody's been talking about valuations, how stretched they look, despite of the kind of earnings downgrade that one is getting to see. Well, the first quarter GDP numbers, no surprises, it's at multi-quarter low. So what is the reason that still the markets are holding up and the valuations are still stretched? Do you see any sharp correction coming about in the next few months?
So I think, the reason, we have been mulling about this for quite some time. And the fact that earnings have been downgraded has been something that has prevailed for several years now. So if you look at the last 3–4 years, the earnings have remained constant. So there hasn't been any earnings growth at all in the last three or four years, if I include FY18 as well. So this is not anything new, but also what we are seeing is that there is a considerable amount of strength that the market has actually exhibited, and this is attributable to a gush of liquidity that is emanating from mutual funds and retail participation. And so what we have seen is that since May of 2014, the average net flow into equity mutual fund has been about 5,500 crores roughly, and after the demonetization it has increased further to an average of 10,000 crores, and in August it is somewhere around 17,000 crores or more. So the considerable amount of fuel power that has actually come into the domestic markets has actually resulted in a significant upside to the equity market, especially for the mid-cap index, and that is also sort of permeating onto the benchmark index as well, but more so for the mid-cap. So there is a sort of a virtuous cyclical relationship between the valuation and the flow. So higher valuations have attracted more flows, and more flows have attracted more valuation. So this is a sort of a spiraling impact that has happened, but underlying improvement has not happened. In fact, on the contrary, it has actually sort of deteriorated if I have to consider the GDP numbers, and also the first quarter earnings growth has shown a sort of contraction at a much broader level. So clearly you have a scenario where fundamentals are quite different and the valuations are quite detached from the fundamentals. So the thing is, now whether if I look at in the last several years, let's say last 2 decades or so, it appears that retail participation earlier was supported by fundamentals such as earnings growth of companies, compensation growth of employees, and hence increase in financial savings, etc. That definitely is not there this time around. So that is also from a fundamental standpoint also gives a sense that there is a
Dhananjay, do you mean
sort
to
of
say that for these people who are investing big time into equity funds, maybe a good number of them are doing it for the first time, and maybe several others are now allocating their capital more into equities than earlier? Are they making a mistake? What's the kind of downside risk that these new mutual fund investors into equities are actually facing today?
So the thing is that it's very difficult to tell me what is the downside, but we have to go back to history and see what kind of an average valuation do you get. So if you look at the historical trend, the average on average, if I exclude this whole buoyancy that we are seeing, if I exclude that period, then the mid-cap index typically trades at something like 15 or 12% discount to the benchmark index. So if you consider Nifty or Sensex, typically the mid-cap index trades about 12% lower. In the recent past, what we have seen is that it is actually trading at a premium. On average, if you look at last 12 months, the premium is almost like 40-45%. But currently, if you consider from a point-to-point standpoint, it is 80% higher than the benchmark index at 42 times trailing. So clearly, the amount of deviation is quite sharp. So the thing is that how will the risk arise? It is, I think it could be anything from global triggers, if there are global disruptions, or local triggers such as election outcome or other kinds of stuff with respect to growth, etc. So that can have a sort of the spiraling impact on valuations and participation in retail investor in mutual funds quite sharply and suddenly. So it's very difficult to pinpoint when will that happen or what is the exact trigger or when it will happen.
Dhananjay, so far the Indian markets have weathered all sort of storms, be it from Fed hiking rates or to their chatter of unwinding their balance sheet. Back home, we'd had events in the form of demon, or probably, you know, there were a lot of questions being raised with regard to implementation of GST, as a result of which the Q1 GDP numbers were also low. But look at the markets, they are still where they were. We're almost very close to all-time high levels. Let's say if the markets were to correct from these levels, that's what you're anticipating. I just want to know which are the sectors where you will still bet your money on.
So the way I look at it is that, yes, you know, if there are triggers, it can be fairly volatile. The way I look at it is that, you know, wherever there is earnings expansion that is visible, we will be there. So our thesis is that, you know, because of the slowdown that we are seeing in the domestic economy, and the fact that it is also veering closer toward various elections, that we believe that government will be on the expansionary path as far as fiscal spending is concerned, and we have already seen that with respect to in the form of loan waivers and the pace of growth in revenue spending, and also some of the rebates that the government is now giving with respect to indirect tax rates, and I am hearing that there will be certain modification as far as GST is concerned. Overall emphasis of the policy will be to resurrect the rural economy and also the agriculture economy, and especially after the demonetization shock. So I think the opportunities will arise in these places, and these will be largely in the space of consumption. You know, it will be things such as it will range across things such as auto sector, especially let's say two-wheelers that are very strongly consumed in the rural areas. Also, four-wheelers is something that we look at. There are FMCG companies, consumer staples, that will also benefit from various initiatives that the government will take to boost disposable income in the rural areas. The other aspect, from a global standpoint, we believe that metal space is on a positive bias, so there is an upside with respect to the metal prices, that is sort of having a positive spillover effect on metal sector, especially the non-ferrous sector, and gradually it will also permeate to ferrous sector as well. As far as banking sector is concerned, we think that the GSEC yields will harden and excess liquidity that we see in the system will dissipate, with RBI sort of getting somewhat less neutral going forward. And we have already seen RBI being mildly hawkish in the last policy, that it is likely that rate sensitive banking stocks, especially in the PSU space, you will see a sort of some impact, negative impact as far as margins are concerned. So we are looking at banks that have good ALM and have got unimpaired capital to actually grow. And these are largely in the space of private sector banks, especially those which have large retail portfolio. Within the NBFC space, we also think that asset-backed funding NBFCs will actually see shrinkage as far as margins are concerned. So we are looking at more like consumer-oriented NBFC companies or niche companies which have got good ALM situation. So those are the broad theses
to kind of sum it up. And today when we are discussing it, starting next week, we'll see earnings will start coming out. Last quarter, the June quarter, was actually a quarter when we saw a lot of destocking ahead of GST. During this quarter, that is September quarter, for which the numbers will be announced, we have seen restocking. You talked about high frequency data like auto sales. You can also look at the PMI. Manufacturing PMI has moved back into positive expansion zone and stayed there for 2 months, August and September. We also had CRISIL coming out with a detailed report of the way their ratings moved, and they had more upgrades than downgrades. So my last and final question is, do you think September numbers will make the valuations look better? Will you expect more upgrades after the September quarter numbers are announced than downgrades?
So I think, the thing is, what we have seen, that the year began with an expectation of let's say 20 to 23% for Nifty index or BSE Sensex index. But as we have moved into first quarter, there are more downgrades. So I think currently the expectation for FY18 would be somewhere in the region of 7 to 10%. My sense is that you might still see a sort of a downgrade that can happen, because it is quite likely that the year would end somewhere around 5 to 8% versus let's say 8 to 10% expectation. So there can be a sort of a marginal downgrade that can still happen. As far as this particular quarter is concerned, there will be restocking that will be happening, and the other aspect is that in this quarter you have 1 month advancement as far as festive demand is concerned. So last year, for instance, the Dussehra season was in October. This year it is one month in advance. So that there is a base effect that happens, which will be pushing up the sales growth, especially for the consumer sector. FMCG staple sector seem to be showing a positive bias there. And of course the base effect of the previous quarter, which was the destocking thing, that sort of also has a positive bias for this particular quarter. So there is a possibility that there are certain segments such as auto, such as consumer space, which might actually surprise positively. But there are other sectors which are still having a difficult situation, such as building material, cement, for instance, where we see a decline in realization. Pricing pressure is still there.
Right.
So I think it's going to be a mixed thing. So I think that's what it is. So I'm not very sure whether there's going to be a significant upgrade from here. We'll have to see going forward whether the margin pressure comes back or not. So the key risk today is that if your commodity prices are rising, for many manufacturing sector there might be a sort of margin pressure, whereas commodity oriented sectors could actually do well.
All right, Dhananjay, we'll leave it at that note. Appreciate you joining us today on Bloomberg Quint and giving us your views on the markets, which look stretched according to Emkay Global. Well, let's also welcome our other set of guests. Joining us on the show is Nipun Mehta, founder and CEO at Blue Ocean Capital. And on the technical front, joining us is Sarvendra Srivastav, who's an independent market expert, and also Mukesh Singh, head technical analysis at VLS Financial Services. Gentlemen, good afternoon to three of you, and thanks very much for joining us today on Bloomberg Quint. Sarvendra, coming to you first. How's the market looking at 99.58? What's the target from these levels that you're watching out for?
Yeah, very good afternoon. See, I think last time we met, we had a view that September would be slightly directional, and towards the later part, it went and sold off. So we had then recommended a long strangle on the 10,100 call and on a 10,100 put and a 10,200 call. So I think that trade more or less kind of reached its objective at 9,700, and post that we are just witnessing is bounce. So I'm qualifying this current pullback as a bounce to the fall from around 10,180 levels to around 9,700. So that's about roughly around 500 points. So you will probably pull back. You're pulling back 60% of that. So you are up around 250 to 60 points from the lows. So my sense is still that this is a pullback. It will find a lot of strip hurdles at around 99.50, 10,000 levels. Today we are just marginally trading above 9950, but I think this area is sticky. So 9950, 10,000 psychological mark is a sticky wicket. Difficult to cross immediately from here is my sense. So I would say with a trading bias, I would say that over the next couple of sessions, I would look for a target of around 98.50, 98.30 on the downside. From here, if you ask me, I would want to short sell on a trading view and keep a stop loss at around 10,016.60 and look to take that small little 100, 120 point dip if it comes.
Okay, that's kind of a contra call, going by the kind of strength that market is really showing. Market internals are very strong. Mukesh, what's your analysis? Do you think one should still hold on to the long positions with a stop loss maybe?
Yeah, when the market was hitting those sub 9,700 areas, at that time it seemed that things will fall apart, and we had all kind of negative news flow coming in. But 10 days later, things have once again quietened up as far as news flow is concerned. And this is a classic hallmark of a bull market, wherein as soon as some euphoria gets created, there are enough number of negative news flow which hits the street, and before anyone realizes, Nifty corrects by 4%, and then it once again starts moving slowly and steadily higher to fresh highs. Even at 9,700, you would remember that I was clearly mentioning a buy based on the running flat corrective which we were witnessing in terms of Elliott wave terminology. And again, I would say this particular run-up is far from over. These sorts of resistance areas around 99.65, 99.75, which are very obvious to the majority, they will attract some kind of profit booking from the holders which were not able to sell in that decline. And this is why this particular slow grind, once we are above this known resistance areas of 10,000 and 10,025, then I think it would be a smooth sailing towards the lifetime highs. And I personally feel even at that 9,700 area also, I was commenting that we will be seeing Muhurat session at record highs.
All right, Nifty's been finding some sort of resistance around those levels of 99.60 thereabouts. Day's high was almost 99.67. Nipun, are you convinced with the levels where market is trading at? There are talks of stretched valuations, but just ahead of the second quarter earnings, what would you do?
Well, good afternoon. When we look at the overall economic situation or the markets broadly, quite clearly what comes out is there are contradictory situations all around. While there is a fair amount of global growth that you're seeing in economies where there had been a slowdown, look at US, look at Europe, you have slowed growth happening as far as India is concerned. You're looking at a situation where CRISIL came out with a report recently which said there are more upgrades than downgrades, but you're really not seeing that in terms of results coming by. You're seeing a situation where GST is acting as a sort of a headwind as far as growth is concerned, but there are expectations that over the next few quarters that should settle, and you could see far smoother growth and much higher growth coming about. So you're seeing money moving into emerging markets, but money flowing out of Indian markets as far as FII flows are concerned. So clearly, sort of contradicting factors coming in. But I think what's going to be absolutely critical is not necessarily the September quarter results, but how managements feel about the next 2 quarters. There is a lot of expectation that's coming about for the second half of FY18. And given the kind of GDP growth that we've seen, or GVA that we've seen for the June quarter, and not very high expectations for the September quarter, I think a lot depends on how the second half really pans in terms of corporate earnings, in terms of GVA, more importantly, in terms of how smoothly GST gets implemented. And that's likely to get translated into whether there are likely to be upgrades or downgrades. There are unlikely to be upgrades for FY18, but at least whether there is potentially a downgrade. When we started FY18, very clearly there had been expectations of higher than 15 to 18% growth. That's getting paid very clearly in terms of the corporate earnings that you could see for FY18. I think what's going to be important in another 3 to 6 months' time, you're going to start looking at FY19 earnings. And which is the reason why I mentioned that what the managements feel about the next 6 months, next 2 quarters, is going to be important. So when you look at the kind of consolidation that's happening within industry, when you look at these kind of upgrades, when you look at the consolidation that's happening within industry, very clearly balance sheets are getting stronger to an extent. You're seeing lower interest costs. You're seeing assets being sold by a lot of businesses. That's not getting translated. So if there are leaner balance sheets, that's not necessarily getting translated into a capex getting announced by a lot of corporates. We've still not seen that cycle take off. So till there is that capex cycle that comes about, till there is greater visibility of earnings, you're unlikely to see a significant re-rating happening. So like I said, it's critical how the next quarter or so pans out. September quarter results are going to be out in the starting from next week.
Keenly watching, for management commentaries, and like we have seen, earlier this month we spoke to some of the key managements in capital goods sector, and thereafter there are several reports, positive reports coming out because the management is really confident. And similarly about Jubilant Food, we were just talking. So I think analysts are keenly watching for management commentary and trying to evolve a strategy. But let's go across to our analyst and see what is the trading strategy for now. And Sarvendra, to begin with, you are hedging your bets. You have a long and a short call ahead of a weekend.
Yes, absolutely. I think the whole idea here is that my sense is that we will be in a small tight range, probably between a 98.50 to a 10,000 is what I would expect the Nifty to trade over the next couple of sessions or more. And with that sense, one long and one short is what I would recommend. And purely, this is a trading. These are trading positions, and they should be treated like that. Right now, we don't have any big positional calls in the market going forward. But Nifty, I've already shared the trade. The next trade that I have is a long on Bank of Baroda. So a buy on Bank of Baroda for a target of around 150 for the next couple of sessions, and a stop loss there is recommended at 137.40. These are spot levels. And the sole sell that I have today is on Apollo Hospitals. The stock clearly has broken long-term averages, trading below medium-term averages. This particular trade could end up being a positional trade as well, where actually the stock could sell off if it breaks supports at around 1,000 levels. But for the time being, I would say that a move back towards 1,000, 1,020 is possible on Apollo Hospitals. And if you want to take that short trade, keep a stop loss at 1096.60.
That call seems to be working because Apollo Hospital is almost trading at day's low. Mukesh, what are your top trading strategies?
Yeah, again, I am also giving one buy, one sell. My sell is in Reliance Capital, though when I had sent the mail, it was trading at 557. So right now it's a bit down, but sell Reliance Capital at 557. Stop would be 567, and target on the downside is seen around 540. Again, this one is going against the overall market, and whenever one observes such kind of behavior from an individual stock, going against the overall market. It does tells us that there is some pending news flow and someone is really aggressive on that particular side. My second call is in GAIL, again trading at lifetime highs. I mean, if longer term charts or rounding bottom pattern in the stock is to be believed, then the stock can once again see rally, really cross 500 mark very easily. I'm giving a buy in GAIL at around 448. Stop would be 443, and target on the upside for short-term traders can be kept at 465.
Okay, so these are the calls. Well, most interesting call that I see here is, in fact, GAIL, because the stock has already moved up roughly 14% or so. If you could look at how the stock has moved over the week, it's up 4% today. But if you look at the overall movement in last 5 days or so, 7 days, okay, it's 12.5, close to 13%. The stock completely got re-rated, Nipun, if you look at it. Do you think there is further upside left to the stock?
Well, Pradeep, very clearly, you are seeing the benefits within the gas business that is there. And a company like GAIL is clearly deriving benefits out of it. With the kind of given infrastructure additionally that's being set up. Of course, a lot of these are benefits of infrastructure that had been set up earlier, but now given the kind of additional infrastructure that's being set up, as well as overall within the gas business, the kind of additional demand that you're seeing, whether it is CNG, LNG, essentially pipe gas as well, you are likely to see significant benefits coming into virtually all the gas companies that are there. So our sense is, yes, this kind of re-rating has happened essentially for the largest company that is there. You are likely to see that happening across the entire space. And we do see a degree of outperformance coming in for the entire gas space over the next 2 quarters.
Okay. Let's look at some of the stocks where we have seen significant volume surge today, and there is a price action, of course. There is one particular sector, one could say, and that is auto ancillary. Well, we have Ramkey Infra loaded here, so let's look at that one. First of all, Ramkey Infra, what you can see, and let me explain this chart a bit. You know, this blue curve is actually the average volume that we have seen over last 10 or 20 sessions, and this white line is the one that represents today's volume. So you can really see, the volume has picked up from almost from the first hour of trade, and the trend has continued. We saw another surge in afternoon trade, and now the last part of it, the yellow line that you see, this is actually the projection. So we expect, the overall volume to be at least 10 times higher by the end of the day on Ramkey Infra. So that is what really this chart suggests you. If you look at some more stocks, and this is Jamna Auto now, as I was talking about, the auto ancillary is a sector to watch out for. Jamna Auto, similar pattern here. You see volume surge initially, and this has been holding on till the end, and we expect a significant surge in this volume going forward as well. There is another auto ancillary stock that I have been watching, that is Forging. Ucal Fuel is one where you can see a similar trend, but here if you look at it, initially there was not much activity, so volume has actually picked up after 10:30, as this chart will tell you. So after 10:30 there has been a lot of activity, and maybe it lasted for an hour or two, and thereafter it's more or less average, but still we'll end up with excellent volumes at this counter as well. So these are some of the stocks, and Sundaram Brake, again an auto ancillary, where you see strong movement today, and a similar pattern is visible. But here you can also kind of see, one volume action around say 10:30. Then it was silent for a while. Another bout of buying interest coming in towards noon, 12 to 12:30 was the another move. And one last move has been very, very recent. If you see in last few minutes, volume has picked up again. So there is interesting pattern on the charts, which clearly tells you that the buying is backed by very strong volume. And all these charts that we have seen, Sarvendra, if you have picked up any price volume movement or an interesting chart pattern on any of these stocks, because the volume, the price movement is strongly backed by volume at all these counters.
No, absolutely. This is one sector that we continue to like in the medium to long term as well. And from the names that we've kind of just now highlighted, I think Ramkey, if you look at that particular stock, I think clearly a well-rounded, what you call a bullish reversal setup over the last now 4 years, right? From 2012-13, it's been making a bullish head and shoulder pattern. The pattern got whipsawed a little bit in the early part of 2017, but now with the kind of volumes that it is picking up, these seem to be fantastic. And the only thing now to be watched here is that the percentage deliveries that would be going in today's Bhav copy. So we'll definitely keep an eye there. But I think overall best setups happening here. I think if the momentum continues, the stock can easily do 170, 180 over the next 3 to 6 months.
All right, so those were a couple of the volume buzzers in today's session. But let's also look at the top F&O gainer. This stock is South Indian Bank. It's been doing pretty well, and there's a lot of build-up seen on the long side. South Indian Bank currently is trading almost at a day's high with gains of almost 6% coming about. Mukesh, on the charts at 31.6, would you recommend taking any trade here?
Its recent highs are placed around 32, and right now it's trading at 31.55.60. If it manages to move close above 32, then this really can further towards 36. So that is something which one should take note of. I would not at current prices. I would recommend a buy only above 30, 10, 20 kind of, and stop in that case can be kept at 1 lower. Target on the upside, as I said, would be around 36, 37.
South Indian Bank, interestingly, has moved up with almost 3x volumes today. And if I'm not wrong, results are expected Monday or Tuesday. So this could be, the movement could be in run-up to the result. We'll have to see next week what kind of results they really announce. AU Small Finance Bank is yet another finance play, so to say, which has been moving up with good volumes. We have seen 4 to 5x volumes at this counter as well. So these are some of the interesting financial stocks really. Nipun, do you have a call on financials, especially NBFCs, not so much on bank, but on the NBFC side, we have seen some extremely negative comments coming from top rated analysts. Is it really time to enter or rather book profit?
When you look at the NBFC space, clearly the valuations are somewhat stretched. When you compare them within the financial space, even with private sector banks, the price to book is significantly higher than the private sector banks. The highest rated private sector bank would probably be lower than the lowest NBFC rating that is there in terms of price to book. So really you're seeing stretched valuations. That opportunity that was there over the last 3 to 5 years has clearly been taken by the NBFCs in terms of retail lending, in terms of their presence in the housing finance. But one must also now understand that margins for them, as had been there earlier, are clearly shrinking. You are seeing public sector banks and, of course, private sector banks looking at that opportunity so aggressively that there is that clear distribution that's happening. There is that same retail space is being looked at by the entire virtually all the participants in the financial space, whether it is PSU banks, public sector banks, private sector banks, or of course the NBFCs that are there. So when you look at the opportunity going ahead, I think clearly that opportunity still does exist in terms of whether it is two-wheeler loans, housing loans, the real estate lending that's been happening. So opportunity in terms of growth does exist. I think margins would shrink, and NIMs would, to a degree, become a lot more competitive for the NBFC space. But so our sense is probably you could see a sideways movement, but NBFCs still do warrant.
Right. All right, we're getting a lot of queries from our viewers. One of our viewers has written on YouTube, Prajesh Chandran. He wants to know, is it better to hold JSW Holding? Well, he's betting on the group because he has JSW Holding. Mukesh, on the charts, would you recommend if somebody has this countered, should they hold on? What kind of levels would you suggest? Mukesh, that question is for you. Any view on JSW Holding?
I'm just checking the charts, and as far as charts are concerned, then it is following. It keeps falling back towards that moving average of its around 75-80 kind of moving average, and it keeps finding support around that particular moving average. I would say if one is holding longs, then liquidity is a bit issue over here, but keep a stop of 1700 and enjoy the ride. It can even test you 2400, 2500 areas.
Okay, that's the call on JSW Holding. Another buzzing stock today is Bhansali Engineering Polymers. This stock has been on a tear actually. This stock has moved up quite a bit over last 3 trading sessions. What's really driving this rally? Somit Sarkar is with us to share more details on this. Fundamentally, Somit, what do you see?
Yes, the stock has been rallying. In the last 1 year, if you see, it has gone up by 380%, and in the 6 months, it has run up more than 170%. So let's first see what the company is. Now, Bhansali Engineering Polymer, that is BEPL, is a 1700 crore market cap company manufacturing Absocol, which is a plastic material commonly used in cars, cars which you see parts like bumpers, spoilers. It is also used as a raw material in telecommunication and luggages. Now, currently there are only 2 players in India who manufacture this product. One is BAPL, the second one is Ineos Styrolution India. So there is no much competition in the market. Now, BAPL has a production capacity of 80,000 tons per annum, and along with this, BAPL is a debt-free company and has been paying dividends regularly. Now, if you see the shareholding of the company, now in the last 1 year, promoters of the company have been steadily increasing stake in the company. Now, promoters have increased their stake to 56.5% in June 2017 from 51.6% in September 2016. Now, coming to the financials of the company, BEPL's revenue in financial year 2017 grew 30%, while in the first quarter of financial year 2018, it stood at 250 crore. And the first quarter, the company made a net profit of 17 crore, which is more than the net profit that it made in the full financial year 2016. Over the period, margins of the company have also expanded by 400 basis points to 11%. Now, coming to the return ratios, for the financial year 2017, company's return ratios were also impressive as they showed a good growth. Now, return on equity stood at 22%, return on capital employed at 48%, while return on assets at 9%.
All right, Somit, thanks a lot for joining us. Clearly, that's been a counter on tear, and as Somit highlighted in his link, that it is the promoter also increasing stake, and also the financials have been doing well. As he mentioned that the first quarter profit was 17 crore, which was the same, almost the same of FY16. But so what's working for the company, Somit? I want to know why has this rally that one is seeing on Y2D basis the last 1 year? What's actually driving? Is it purely the financials, or there is something else, capacity expansion or something?
So other than financial, there are various other reasons. Now, as I said, there are only 2 players in India, and these 2 players can only meet around 65 to 70% of the current demand, which clearly shows that the demand for this product is more than the supply. Also, if you see, BAPL has planned a capacity expansion of around 300 crore, which they will be funding by internal accruals, and this capacity expansion will increase the company's total capacity by 71% to 137,000 tons per annum. Also, to meet the growing demands, the company will be using increasing the utilization to 95% from current level of 85%. Also, the management has given a revenue guidance growth of around 30% for the coming year. Now, if you see the risk factors, there are only 2 risk factors in the current market conditions. First is fluctuations in the raw material prices, which have also impacted the company's financials in the past. And second is any delay in this capacity expansion plans could lead to an opportunity market share loss. Now, finally coming to the valuations of the company is trading nearly 2 times the price to earnings ratio of its peers, that is Ineos Styrolutions, and which can be also justified if you see the company's growth plan and expansion that it has been doing.
Okay, thanks, Amit, for that. Bhansali Engineering, the stock has been buzzing up. Mukesh, have you had a look at this chart? Any calls?
Yeah, Bhansali Engineering, actually when it was around 55-60 at that point of time, it really looked good on the charts. Even now also, if you talk about larger degree rounding bottoms, then those patterns are still unfolding in the stock. But as we know that from last 3 days, it has run up from 80 to 115. So there is a bit of an expansion coming in the last 3 days. After such expansions, it's normally observed that stock goes into a bit of a cool off. And if that is the scenario, then we can expect this particular prices to stay in this range of 90 to 115 for next few months. If it is a momentum play, then God help us, keep a stop at around 85 and ride the story till 160.
All right, that's Bhansali Engineering. Let's also pull up Granules India. That stock's been very strong since the morning session, and currently I guess it's almost trading at a day's high. Granules India is quoting at levels of 122, and the move came in the second half of the session. As you can see on your screen, it's currently at a day's high. Sarvendra, on the charts, any trade here?
I think clearly around these levels, around that 120 mark, I think there's definitely been buying in. A couple of months back, that number was slightly lower at around 110, but I think definitely the buyers slightly increasing prices and wanting to buy slightly higher as well. So subsequent bottoms, if you see, have been slightly higher by 5-10 points on either advances, and volumes today are very, very brisk. So again, I think it would be interesting to watch the Bhav copy if physical deliveries are also going into this stock. And for a stock that was around 150, 160 levels and a small little correction over a year back toward 100, I think clearly a 33% retracement is being done here. So I would, again, as I said, I don't mind putting a trading bet here and look to buy for a target of around 135, 140. And if that's the case, I would keep a stop loss at 116, below 116, and take a long trade.
All right, that's the view on Granules India. Well, the other counter, which is almost at day's high, is also Escorts Limited. That's up almost closer to 5% at levels of 697. And this too has had a great run this year. Escorts is inching very closer to that 700 mark. But on that note, let's quickly see what the global markets are doing. Well, so far, looks like we are bracing for a strong closing for the Indian markets and the European markets. It's turning out to be a mixed session there. DAX is just about in the green, and CAC is trading with cuts of almost 8 points. You've got the UK market, FTSE 100, that's seen an uptick of 0.1%. So it's turning out to be a mixed to very muted session for the European markets. But Nipun, just want to get your view of how have you read the deal between Shoppers Stop and Future Retail, where they've sold Hypercity to them. So far, it looks like it is positive because the debt will be going out of Shoppers Stop's books. The cost of debt will also come down in the subsequent quarters. Do you think all the positives have been factored in the stock price, or there could be a further rally in Shoppers Stop?
Well, I won't talk individually about a company, but when we look at the deal, the transaction, I think what's becoming obvious is the fact that there had been a significant movement of share of brick and mortar stores sale happening onto the e-commerce business that was there. You're seeing, and we've seen, of course, Kishore Biyani's clearly mentioning that that's something that's likely to unlikely to sustain. You're seeing that sale coming back. You're seeing sales moving in, whether it's a small store format that is there or mega store or hyperstore format that is there. You're seeing those sales coming back. You're seeing the success that happens in stores like DMart, where during the festive season or during holidays, we hear of actually people queuing up. So that's something that that's likely to show up in terms of significantly higher volumes, in terms of higher growth going ahead in terms of these brick and mortar stores. So when you look at the valuations for some of them and the fact that there had been a feeling that there is unlikely to be a similar kind of growth over the next several years, I think when you look at the kind of consolidation that's happening within the industry, I think it's likely to gradually show up that over the next few years, the top line growth for these brick and mortar stores is something that's likely to continue. And you could see these kind of valuations continuing for some more time.
Sarvendra, you know, the trade in retail space that is happening right now, and see if you confirm that on your charts. Actually, traders are moving out of Shoppers Stop because they probably think this story is over, the news is completely priced in, and they're getting into Trent. The stock is up 6%, excellent volumes, at least 3x volumes we have seen here. And there is another stock, CESC. Remember, CESC is not a retail play, but they're already working on a scheme whereby Spencer will be coming out of this one. And also there is another interesting business, which is power distribution business of CESC, that will also be hived off. It's a value unlocking plan that the management is already working on, has been announced already, it's in public domain. So do you think this will be an interesting trade, Sarvendra, coming out of shoppers, get into Trent or CSC?
I think if you look at charts, I think for shoppers and Trent, I think more or less the last leg, the last few months, 6-9 months, I think more or less the pattern setups and the kind of move. And if you look at fractals, I think broadly the patterns look slightly similar. So I would say more or less both are in the same zone. The only thing is, yes, shoppers being a slightly more traded and a more liquid name, I think there's definitely been a correction with this news. But my sense is that the way it is approaching its all-time high is at around 624. So I think that high should get tested going forward. And over the next couple of months, it will be crucial to watch as to how shoppers perform. But from here, I think clearly with the kind of quarterly bar that we had for shoppers last quarter, where it has kind of cut back into a price range of the previous almost 10 bars. My sense is that with that kind of a volume, I would say I would not, if I'm already holding, I would probably hold for another 20% and then see of switching, because both Trent and shoppers to me look like next 3-6 months 20% candidates. So either side, I think there's not much to choose. But yes, within the other name that you have taken, CSC, I think clearly the way the stock is been outperforming and a small little correction also probably over, I think this one probably could do slightly more in the 6-month period. So this could be actually more close to 1400 over the next 3-6 months. So it becomes a candidate of around 40% possible upside. So all these three names, I think clearly tradable. The bias remains positive. First two being 20% candidates and the CSC being a 40% candidate going forward next 6 months.
All right, so positive view coming in on these retail stocks. But moving on to the aviation space, there is a need to bring down cost in the sector. That is the word coming in from SpiceJet chief Ajay Singh. Speaking to Bloomberg Quint's Krishanu Mukherjee, Singh said that he hopes for ATF to be included under the ambit of GST and is asking the same to government. Listen in.
As a whole, we need to bring down cost of aviation. This is also part of the Indian aviation policy. That cost of aviation must come down. So we have to work relentlessly towards bringing down cost of ATF, bringing down cost of airports, bringing down taxation in the system. And if you can bring down cost, fares will come down and the aviation sector will grow even more rapidly than it's growing today. So we are discussing this constantly with the government. Government is, and especially the Civil Aviation Ministry, is very aware and pushing this hard. As happens around the world, we need ATF to be included in GST to get input credit for it, and this is something that we are raising with the government, and we hope that there will be a resolution.
So speaking about low costs, RCS and Udan, the second round of it is coming now. You're due to bid in a month. Have you shortlisted routes so far? What sort of routes are you going to bid for?
Well, it's we are going to bid for sure. Which routes these are going to be, that's still being worked out.
So another aspect that is being mooted by a lot of your rivals is the aspect of a low-cost, long-haul carrier. As SpiceJet, a carrier, you have international operations, but not extreme long-haul operations. Are you looking at the concept of low-cost, long-haul operations and SpiceJet being a party in that also?
We think it's a very interesting idea. We think that there's a great market in India, and many more people would fly overseas if the fares were lower. Right. For that, the cost has to be a lot lower than it is today. And of course, we are studying it as our other airlines.
Mukesh, do you see any trading opportunity in SpiceJet or maybe Jet Airways or Indigo?
SpiceJet, this Jet Airways, I think it's behaving against the overall market. Ditto is the case with Indigo. I will definitely go with this SpiceJet, because the only reason being is this one is showing far more relative strength as compared to the bigger cousins of SpiceJet, if we can use that terminology. But I would definitely go with SpiceJet. The pattern emerging over here is a long-term bullish breakout from a very long rounding bottom, and the breakout area is 120, 125. So it has not gone too far from that particular breakout area. I mean, one can buy at current price, one can buy on dips around 120. keep a bit bigger stop loss, because the targets according to the pattern which we are seeing on the charts is coming around 200 plus. So definitely I will go with this particular SpiceJet.
So you'll go with SpiceJet, but gentlemen, as we speak, the markets are at almost days high. And remember, we were talking about the 20-day moving average. Finally, the index has breached that mark of 9973, currently trading at those levels of 9976, and good strength coming from the PSU banking space. The Bank Nifty is also trading with gains of 0.5%, but weakness in heavyweights like IndusInd and ICICI Bank are capping the gains that we're seeing in both Nifty as well as Bank Nifty. Well, let's get our another guest on the show. Mr. Devane Choksey, MD at KR Choksey Investment Managers, is joining us right now. Mr. Choksey, good afternoon. Thanks very much for joining us today on Bloomberg Quint. Well, first up, I just want to get your view on how are you reading into that deal which has recently happened where Future Retail has bought Hypercity from Shoppers Stop? Well, most of the brokerage notes are highlighting it's a positive deal for Shoppers Stop, but just want to get a check. Do you see further upside for Shoppers Stop price, and how are you viewing the deal for Future Retail?
Yeah, good afternoon. Well, I wouldn't know about exactly, I think, the price or the upside or on that, because I think we have not got this stock under active coverage. But the deal on the face of it, I think, sounds absolutely appealing. On one side, the Shoppers Stop is trying to focus on the lifestyle segment, I think, where they have got a larger amount of brand, where they are basically, I think, now aligning themselves with Amazon. So to a greater extent, I think it makes more sense to focus on the area where you are more strong at. The Hypercity brand particularly, I think, could have its own meaning probably when you focus, I think, big time onto the wholesale part of the business. I guess I think the Future Group also finds a strategy in this, because I think they are more focused on the grocery segment of the business. So obviously I think you end up, I think, having the win-win kind of a situation wherein on one side you have the lifestyle, on the other side you have got the grocery business. I think both the companies individually trying to form their own strength. However, since we don't have the active coverage, I am unable to give you comment on the price and the recommendation of the stock.
There been one stock, GAIL, which is in limelight. You know, entire week we saw a lot of volume at this counter and stock kept moving up. We did speak to you earlier this week, I think on Tuesday when the news came out. But stock has already moved up 14% or so. Do you think there is still more steam left in GAIL, or now is time to look for some other story in this sector?
So Pradeep, we did discuss this particular subject that in case of GAIL, we are seeing the possibility of an upside revenue due to the spread of the margins across the length and breadth of the country where they are having their pipelines. In some pockets, I think if they have the pipeline which are basically, I think, finding a relatively lower amount of realization vis-a-vis in the other pockets, I think, where they are finding higher. So with the distribution price, I think, or the margin getting evened out, possibly you would see a balanced kind of an upside into the realization price, and that's where we are talking about 40% kind of a price increase for GAIL. That is also what we talked last time. The view still holds, and we believe that I think it's a good move as far as I think the government is concerned, and as far as good move as far as the company like GAIL is concerned. Another part of the story is that the company is well entrenched into the distribution business of oil and gas, along with the petchem segment. So to a greater extent, I think we would like to believe that the model itself, I think, is a promising one. Many utility business, utility funds, I think, who are basically investing into utility businesses, they have been liking such kind of stories, and that's where I think you are typically seeing a promise of around 14-15% IRR kind of a return coming into the company over a period of time. So that's how the infrastructure play is being played out, and that's where I think you are seeing the larger participation. Not too sure whether in the short term the stock has done enough. Maybe some large allocation of funds coming into the company and some of the large cap companies included. I would think that the price appreciation could well be on cards going forward.
All Right, so expect more gains coming in on GAIL, the stock which has performed really well in the past few trading sessions. Before I go across to Nikki to find out which is the small cap stock of the day, just want to pull up one stock. VLS Finance has suddenly surged. It's seen good gains of almost 16 to 17% coming about. There you go. It's trading at day's high at levels of 84. Remember, this is a company which has almost 12% stake in Relaxo Footwear too. If you could just pull up Relaxo and see if there is any sort of rub-off effect seen for that counter. No, that's just about trading flattish. Well, we're talking about the broader markets. Moving on, the small cap stock of the day is Emkay Infra, according to Nikki Merchandani, who is here with us. Tell us what's brewing in this counter. We've seen almost 50% gains in this week.
Hi Navneet. So Emkay Infrastructure is the small cap stock of the day. It has rallied as much as 13.6% to its highest level since May 2012. Now in past 6 consecutive sessions, the stock has gained as much as 50% and in today's spikes is based on back of high volumes. Now volumes have surged, currently stand at nearly 11 times its 30-day average volume on exchanges. For the years, the stock has risen as much as 92%. The trigger behind this move is the company is going to hold an EGM on October 30 to consider issue of convertible warrants to both promoter as well as non-promoter group. Now promoter group is planning to issue around 50 lakh equity warrants out there, aggregating to the worth of around 50.50 odd crore, and in non-promotable group it's going to be issuing around 70 lakh convertible equity warrants to the non-promoter group. This includes some marquee name like Akash Bhansali owned Adi Financial. Now he is directly related to Inam's group Vallabh Bhansali. Now this construction and infra development and management company has a market capitalization of around 800 odd crore.
Okay, thanks Nikki for all these details. So this is a stock we have been watching. It's a volume buzzer as well today. So Emkay Infra is an interesting stock. Our technical analysts also recommended this stock because of the kind of price volume action we have seen so far. Deven, now one last question on commodity space. Actually, we talked about oil and gas, but if you look at metal, would you expect a sustained rally, and more importantly, will it translate into strong numbers? For example, Tata Steel has come out with the production data for last month that has been strong, and today Tata Steel is actually leading the Nifty if you look at it. Should we expect good numbers in September quarter?
Yes, Pradeep, I think that's what our take would be. As we have been talking for some time now, that the metal as a commodity has upturned and it is likely to be staying in that particular territory for a period of around 3 to 4 years. And I think we may have crossed 1 year already by now. So I think we still hold on to that view that as a commodity, metal is going to remain strong. Fortunately, the input cost in form of crude oil related energy prices, I think, are also under control. And as a result of which, I think most of the companies are likely to gain benefits out of it. India territory particularly, companies are beneficial more because also of the fact that the relatively non-expanded capacity by most of the metal players, and at the same time the demand is on rise. So obviously I think the advantage would be on both count. On one side lower input cost, on the other side higher amount of volume. We will be seeing upcoming into the profits as far as I think these companies are concerned in the metal commodity. We have been particularly liking the white metal more than the ferrous, but the story remains intact for both now. White metal I think remains relatively more powerful play going forward. And that's where I think the Vedanta group of companies could possibly show relatively better performance. Of course, Hindalco, Nalco, but I think more importantly, Vedanta group of companies could show relatively better performance.
All right, that's the view coming in on the metal space, which is also your top sectoral gainer of the day. The Nifty Metals Index is up almost closer to 3%. And as we speak, markets are once again at day's high. Let's go across to Darshan Mehta to find out at these levels what's the chatter in the dealing rooms, Darshan.
Navneet, microfinance companies are something that are finding a lot of flavor today, be it Ujjivan, which is up almost 2%, or a Bharat Financial or an Equitas. Across the board, HNIs are rather active on this space. So these are the counters that dealers are talking about. AU Small Finance Bank was up 5% the last time I checked. There is a large domestic mutual fund which is accumulating this counter. So this is one stock that we've been watching. And finally, Mahanagar Gas is also trading at the day's high. Dealers indicate that one large foreign brokerage is actively pushing this stock to its clients. So these are the counters that dealers spoke about to us today.
Thanks, Darshan, for that. So these are some of the stocks to watch out for, really. But let's also look at, where there is enough price volume movement in last hour of trade. And Sarvendra, if you could look at these charts, one is JP Power. The stock has moved up by 2.5% in today's trade. But more interestingly, in last few minutes, we have seen significant volume action at this counter. There is another smaller stock, Make Money Organics, where I have seen a strong volume action building over last few minutes. And Jamna Auto, of course, we talked about it. Punj Lloyd, I think, is a third stock where we have seen volume action. And also this stock is close to today's high. Yes, the surprise volume action that we can really spot. Any call on these three or any one of them where you see something interesting?
I think clearly what interests you with the market is that the market is probably making a new swing high, stocks which are probably doing that. So I think within these three names, I think Make Money clearly the way it is closing into all-time highs again and carrying on the good work and a small correction which we had last week from around 90 odd levels to around 75. I think that small correction more or less has done the trick and the stock has started its uptrend. So my sense would be that 105, 110. So 110 probably I would say is an outside target where over the next 1 to 3 months this stock can easily do that. So my sense is that around 22% on the upside, definitely a good bet from the three names that we have discussed. And if someone is taking that trade, you will have to keep a stop loss below 83. Take that long trade and look for targets in the region of 105, 110.
Right. Well, Jamna Auto this week went X stock split as well. That's the reason why it's quoting at those levels of 50 to 60 rupees. But what's giving support to markets today is even the IT stocks. So you've got the Nifty IT index, which is trading in the green. You've got the heavyweights in that for the likes of Infosys, HCL, even TCS is trading in the positive territory. Devane, would you put your money in any of the IT stocks which so far have underperformed?
Well, the view remains clear for IT to move up in the year. I'm saying the range we are not expecting more than 10 to 15%, or at the best, I think in a very buoyant market, 20%. I think if IT ends up giving 10 to 15% kind of a return throughout the year, I think that will be sufficient. Well, given that kind of a scenario, we believe that I think the opportunity should be seen elsewhere. You have many of the frontline companies available in auto business, many of the companies available in the finance business, capital goods segments as well, and large mid-sized companies also available, where I think we are seeing a possibility of earning 25 to 30% in the course of a year. So vis-a-vis IT, I think we prefer to have those areas where we have larger clarity, which I just mentioned now.
All right, that's the view coming in on the ID index, but just 8 more minutes for markets to close. Mukesh, any strategy that you would have right now as the index specifically is trading at day's high, almost 14 points away from that 10,000 mark?
This is what I was mentioning earlier in the program. When we started this particular program, the Nifty had come down by 20 odd points, and it seemed that we may end lower, but as within a matter of 30-35 minutes, what we are seeing is Nifty pushing towards 10,000 area in spot. Actually, it has already done so in futures. So this is a market wherein if you can take advantage of the dips, you will win very good money. At that point of time, GAIL was trading around 447, 448. It just made a high of 457. So try to take advantage of the dips, and if at all, if it breaks above and closes around these particular areas, I would be keen on buying this 10,100 call, which is trading around 45, 46. It's an option position, so it's very speculative. Anyone who is going to buy this should understand that there is a complete loss of capital over here. But around this 45, 46, I expect a move towards 100, 110 in this particular strike price.
Right. Sarveen, just want to come to you. Correct me if I'm wrong. At the start of the show, you had a sell call on Nifty. At these levels, would you cover your shorts?
No, absolutely not. I think the stop loss mentioned was 10,016.60 on spot. So I would continue to hold that trade, and I would say that 10,000 itself, the psychological number, is definitely one big hurdle that I see. So I would definitely, if I have to go turn bullish, I would definitely want 10,000 to be decisively broken out of, and then probably the other side of the trade will also open up. So I would still carry that trade and see as to how it opens up and plays out on Monday. So I would probably take that trade or a call. If at all I have to reverse the trade, probably Monday, Tuesday will do the trick.
Okay. Sarvendra, have you spotted any interesting move in last hour of trade? Any BTSD or STBT ideas?
Yeah, I think a couple of names that we only discussed, I think Ramkey and Make Money, I think definitely these are two trades which can probably be a BTSD as well as, or probably a positional carry for the next whole week, 10 days. That's definitely the case. And I think within the large cap space, what I like now is that the way Reliance has kind of closed above that 830 hurdle. Today's close now probably would be above 830. And within the large cap space, I think that would be one stock to look at if you want to do a BTSD kind of a trade, and also probably SBI. Bank of Baroda already have given a long trade, but SBI is also the kind of move and the kind of trade that has happened for the day. I think definitely it's got the possibility to kind of last this trade for the next 3-4 sessions, at least the momentum I'm talking about, and probably another 10-12 points on SBI is possible from here.
Okay. Devin, one last question from my side. Some fertilizer and chemical stocks like GNFC moved earlier this week. You have NFL, Shri Pushkar Chemical moving up today with good volumes. Do you see a trend? Do you see a story? Are you recommending these stocks?
So Pradeep, I think we have been selective with the list, and probably in our list we have larger part of the conviction in UPL. We believe that this is a company where you have a larger amount of opportunity as far as the size is concerned. A multinational company in true spirit, along with the focus on a generic business in the formulation segment of agrochemicals, and some of the innovative products, revolutionary products in form of Zeba, which basically I think is friendly on the water management in the field. So obviously I think we like the UPL story far more than some other stories at this point of time. We are convinced with even companies like BASF, Monsanto's, I think where we see the growth remaining on a larger side. Yes, the focus, and to answer that particular question, I think on the investment side, yes, we are focused on some of the large companies because we believe that the size of the book would probably expand faster in a given scenario where the larger thrust is coming onto farmer and farmer related subsidies, which is likely to get directly transferred into the bank account of the farmer. So which would probably help him, I think, stay more tuned with the farm and farm field related activities. And that's where I think the input companies like agrochemical businesses would probably, I think, have a larger say, including some of the fertilizer companies would have a larger say.
Okay. Well, gentlemen, please stay on with us for the closing and we'll take a final comment from all of you. But Navneet, how does the closing really look all a century?
Well, it's looking really great, Pradeep. It's going to close above the 20-day moving average, and it's also going to close almost at a day's high, which is a very positive sign. So Nifty just shy of 13 to 14 points of that 5-digit number, 10,000. But at day's high, Sensex 2 going to close with gains of almost 0.7%. And Bank Nifty so far has been a little bit tepid in the last few sessions, but some sort of strength actually came from the PSU banking space. The Bank Nifty also closing with gains of almost 0.6%. Broader markets also doing pretty well. You have the Nifty Midcap Free Float Index going to close with gains of 166 points. The BSE Midcap Index also up almost 1%. But look at the Small Cap Index outperforming, up about almost 1.3%. Clearly, there was strength seen in the broader markets today as the advance decline ratio was also in favor of the advances. But let's look look at a couple of Sensex constituents, which were the gainers and losers for the day. And there you go. It's a sea of green on your screen. The biggest gainer was Tata Steel. Well, clearly, the Nifty Metals Index was also your top gainer. Then was Sun Pharma with gains of 3.5%. NTPC, State Bank of India. So clearly, a lot of heavyweights, HUL, Infosys, Reliance contributing to today's gain. On the losing side, only a handful of them. Hero Motor was your top loser today, followed by Tata Motors, HDFC, Dr. Reddy's and HDFC Bank. Well, looks like the gains were capped by the heavyweights, HDFC and HDFC Bank. Both these together constitute almost 17 or 16% weightage in Nifty, Pradeep.
Well, to talk about some of the mid-cap stocks, though, if you look at BASF India, well, that is the key gainer of the day on the back of a very bullish report coming out from a domestic brokerage. And also you have interesting play in retail. Really, if you look at what happened to retail, let's look at Trent. This stock inched up closely. Through the day, we have seen interesting buying with good volume at Trent counter. If you look at Shoppers Stop, on the other hand, you'll probably see a mirror image in the sense that Shoppers Stop opened higher, but it finally closed weak, and Trent kept inching up. So were traders really shifting away from Shoppers into Trent, or maybe CESC, which is again a quasi retail play because Spencer is an underlying asset in that company, which will come out. South Indian Bank was interesting mid-cap stock. Bank will announce its result on Tuesday, and that would mark the beginning of result season. Actually, South Indian Bank ended up 6.25%, so probably good result from there. Aptec was yet another interesting stock that moved up after a long time. Actually, it came on my radar, closing at the upper circuit of 10%. Actually, also if you look at NFL and Shri Pushkar Chemical, these were two more buzzing stocks. Although today we had a strong market breadth and there were many stocks moving up with good volume, but these are some of the names that really caught my eyes today.
Good day for the benchmarks, even for the broader markets. Let's quickly look at which were the top contributors on Nifty then. Infosys, after a lot of trading session, contributed almost 10 points to the gain. You also had stocks like Reliance Industries, Tata Steel and State Bank of India were up and about in today's session. Well, what dragged the index lower was your major heavyweights, HDFC, and you got Hero Moto, Bharti Infratel and IndusInd Bank. All these counters actually capped the moves that we saw on the index today. Well, we've been talking about the market breadth, which was pretty much in favor of the advances. We started off with advances of almost 1,223 and we ended with 1,069 advances to declines of 450, clearly telling you 2:1 was the ratio when it comes to the advance decline ratio in terms of NSE. Well, the volatility fell for the 6th straight session. Now that's a positive sign. India VIX closer to that mark of 11. Remember, it had touched the mark of 14, so down about 5.5% in today's session. Let's also see what kind of participation that we saw in the market in terms of a turnover. We were witnessing somewhat average turnover in the last 2 sessions, and today also actually it's been pretty much below the average, I would call it, very closer to the 4 lakh crore. The NSE F&O turnover was just about 3.6 lakh crore. Let me quickly take you through a couple of stocks. VLS Finance surged in the second half of the session. That counter will just come up on your screen. Good gains seen there, closing with gains of almost 16% there. The volumes were also pretty much on the higher side. The other counters which did well was Orbit Exports, that also saw good gains of almost 15% again, closing at levels of 161. It's not every day that you see such moves for Orbit Exports. Emkay came out with a report on BASF. That counter closed with upper circuit gains of 20%. And finally, you also had a counter like Arshia International, which performed on the positive side. So that's closing the day with gains of 15%, Pradeep.
Oh, well, so these are some of the stocks buzzing today in trade, but next week is going to be interesting. And Devin, what's your view on that? Not because we are going to retest 10,000 mark and we'll have to see whether we can cross, the Nifty can cross that level or no. But more interestingly, because the result season begins, and on Thursday, you'll have IndusInd Bank and TCS, two big companies announcing the results. That will kind of mark the beginning of result season. What do you expect, and how would you plan next week?
That's an important question, and I think generally we don't plan on a week-to-week basis, neither on month-to-month basis. However, events are important, so obviously we are looking at the result season with a lot of optimism this time around. Consumer companies and the consumer finance companies particularly, including banks, have reportedly fared well in this particular quarter, September ended quarter. Including some of the commodity companies have also done reasonably well from the numbers that we can see. Auto companies in general have, I think, except the month of July, I believe, I think in general for August and September they have done well. So I think we are going to see relatively better performance coming in from various pockets. The disappointment, of course, will continue from telecom. Disappointment will continue to an extent, I think, from IT as well. And pharma would be mixed, as I would say so. I think nothing big that one could expect except some improvement in the performance in some of the heavyweights like Sun Pharma. So beyond that, I think at this point of time we believe that individual companies will be under focus. I think the business situation probably has been favorable for some of the larger companies. So let's hope for the better time going forward with the result season.
All right, let's hope for a better quarter two. Thanks a lot, Dwayne, for joining us today and giving us your views on markets. Have a good weekend. But let's also get some closing thoughts from our technical analyst. Sarvendra, do you see 10,000 mark on Nifty next week?
See, absolutely possible. We are just 17, 20 points away from that marker. So Monday opening would be critical. And the important part would be that how we break out and close past 10,000. So I would say that looking at the weekly setups, I would still qualify this as a pullback to the larger decline on the Nifty that we had from around 10,180 to 9,700. And I would say that we have kind of pulled back close to 61, 62%, slightly higher probably. But I think we are still within that classification of a bounce. We are still within that 60% bounce area, and anything negative coming out over the weekend, probably you would kind of slide back. And looking at the rupee as well, the way it is panning out, my sense is that if rupee had closed slightly stronger today, I would have said that yes, the big bang breakout will happen from here. But looking at the rupee, I would say that I'm still circumspect and I would want to wait out next week, see how Nifty behaves around 10,000 and then probably take a larger call.
Mukesh, last time around when Nifty was quoting above 10,000 mark, Nifty Bank was also around 25,000. But if you look at today's close, while Nifty is just 20 points away from 10,000, Nifty Bank is around 24,200 or so. Is that the pressure point? What's your call on Nifty Bank really for next week?
Yeah, I mean, if at all, if everything had to move in unison, then we would have crossed the 10,200 by now itself. There are a few sectors which get into kind of rotational basis, and now that the Hindustan Levers and Reliances of the world have taken the leadership, HDFC Twins are having a bit of an off day. But I think this would soon get corrected on the upside once Bank Nifty takes out 10,000, 24,300 kind of area. And in that case, I expect a sharp spurt towards that 25,000 mark. Again, I would be giving time to the markets. They have performed admirably well in spite of all the negative news flow and the pessimism in the market in last 10 days. I am able to give one more or a couple of days more to break out in Bank Nifty. If it were to happen, I mean, this Nifty rally can have additional legs, and we can test the all-time highs pretty soon rather than waiting till more obsession.
All right, gentlemen, thanks very much for joining us today in Bloomberg Quint and taking us through your technical calls in the market for indices and also individual stock. But on that note, let's take a quick break. But stay tuned. We return with a special conversation with Emkay Surana, who is the CMD of HPCL, on the other side.
Are we live? Programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business news, we're news for business people. Get a ringside seat as Bloomberg Quint goes to the India Economic Summit. With exclusive sessions and panel discussion, 5th and 6th October, only with Bloomberg Quint.
Welcome back. You're watching Countdown. Let's take a look as to how the markets fare today. Clearly, it was a good closing, Pradeep, for our markets, almost closing at day's high, few points shy from, almost 20 points shy from that crucial 10,000 mark, which so far has been the upside in terms of options data. Also, the range which one was getting was 9,800 to about 10,000. What contributed to the rally today clearly was the IT pack. You had stocks like Infosys which did well, so good gains coming about, or rather good contribution from that space as well. Let's just pull up the Nifty contributors chart. That will clearly give you a picture as to which were the stocks which contributed the most and which capped the moves on Nifty today. Well, we did see the heavyweight like HDFC dragging the index lower, but you also had heavyweights like Reliance. The entire metals pack was up and about. The Nifty metals index was your top sectoral gainer, and the PSU banking index outperforming clearly. State Bank of India was up. That also contributed good gains to the index today, Pradeep.
Yeah, and it was heartening to see, banks participating, especially PSU banks. You had PNB moving up roughly 4% in trade today. Nifty Bank has been an underperformer, but it has been trying to catch up. But PSU Bank Index, if you look at that index, gained significantly. And we also had metal contributing in a big way. JSW, Tata Steel, SAIL, Hindalco, Vedanta. So these are some of the stocks or sectors that were really driving Nifty and Sensex today.
So good closing for the Indian markets, but let's also talk about the European markets, how they are trading. Well, clearly, they've started on a very muted note. Let's go across to Bloomberg's retailer in London for an update on the same. Hi, Bree.
Hi, good afternoon for you over in India. European equities are edging lower this morning. The Stock 600 is being led down by retail and utility companies. And investors continue to watch Spain after Catalonia's illegal independence vote on Sunday. Political and financial pressure are bearing down on the rebel region as Spain's prime minister and his cabinet meet today. We are seeing European bond yields rise and the euro is weakening, hitting the lowest level since August. We've also had some data out of Europe's largest economy. German factory orders surged in August, a sign the economy is set to keep up its growth. Orders rose 3.6%, far exceeding the economist's estimates of 0.7%. The German 10-year bond yield is up about 2 basis points. And the pound fell to the lowest level in a month after a former cabinet minister announced he is running a campaign to oust Prime Minister Theresa May. And that's what we're watching over here in Europe.
Well, thanks for this update from Europe. And now let's move across Up next is HPCL, the stock that has been buzzing for a few days for a number of reasons, be it the government's decision to sell its stake in the oil marketing company to ONGC or the proposed MRPL merger. And recently, the focus has shifted back on retail fuel prices. Now that they are hovering around lifetime highs, joining us now to talk about all these things and more is the Chairman and Managing Director of HPCL, Mr. Emkay Surana, and our in-house energy expert, Somit Sarkar. Somit, over to you.
Good evening, sir, and welcome to the show. My first question to you would be: government has cut excise duty, and is there a chance that OMCs will be bearing the brunt of the rising crude prices?
No, presently the central government has cut the excise duty on petrol and diesel by 2 rupees, which has got an impact of around 2.5 on petrol and around 2.3 or 2.25 on the diesel. Now, yesterday, Honorable Minister has also requested the state governments to consider slashing of the VAT, because the VAT is also quite high in most of the states, in some states even higher. And if that request is considered, then there may be some softening of the prices on that account also. As far as oil marketing companies are concerned, they operate on a very wafer-thin margins, so we do not have much of a leeway. But as we go forward, we need to see how the prices stacks up, how the product prices moves in the international market, what are the effective rates of taxation at that point of time, and what are the crude prices, what are the product prices, and depending on that, we need to take decisions on the prices which should be. Ultimately, it should be a reasonable balance between the consumer's interest as well as the commercial health of the organization.
So, assuming that the prices would go up, will then the OMCs cut their margins?
No, right now we decide the prices based on the international prices on day-to-day basis. Now, this is basically decided on a 15 days rolling prices on day-to-day basis. Now, what should be the actions required? That will depend on what the prices prevailing at that point of time. So it will be a bit hypothetical and presumptive to speculate that, okay, what need to be done at that point of time. As I mentioned, that it is not like we lower the margin or we higher the margin depending on our own wish, because ultimately we also operate in a space which deals with the products which has got a reasonable sensitivities, and therefore the oil marketing companies operates in a very thin margins actually. So we need to see that what possibilities are there from time to time, and based on that we need to take actions. But normally we have got little leeways on that.
So ONGC will be acquiring government stake in HPCL at a prevailing market price. Will that value be the right value for this acquisitions, because market was expecting some kind of premium valuations to come in?
I do not think that a decision has been taken that ONGC will be acquiring HPCL at the prevailing market pricing. Government has appointed advisors which are there doing their job to do the valuation of the company. Market pricing is one of the methodology to evaluate a company, but it is not the only method to evaluate the company. And therefore, once the evaluation is done, at that time the buyer and seller has to decide that what is the price at which they wish to strike the deal. And so I do not think that right now there is any decision like that which suggests that the deal has to happen only at the market price.
But sir, ONGC CMD did say that the acquisition will happen at a prevailing market price.
Yeah, he did say that. So that is the buyer's view, but there has to be seller's view also on that, and ultimately it has to be decided between both of them. It's not a question of me agreeing or not agreeing. It is to be decided between the buyer and the seller, basically, that what price they wish to decide. As far as we are concerned, as HPCL, we are neither the buyer nor the seller. But there are certain guidelines which are defined in the SEBI Takeover Act or the Majority Transfer Shares Code, and there are certain provisions in the Companies Act, and HPCL will be guided by that.
So once ONGC acquires HPCL, there will be an integration between MRPL and HPCL. So what would be more apt, an acquisition or a merge, and how will that benefit HPCL?
Actually, it makes sense, and there is a reasonable logic for MRPL to be in HPCL fold, because it gives a synergy. They are the standalone refining company, and we have got a marketing setup and we sell more than what we produce. Now, the proposal is yet to be taken to both the boards as to whether it should be a merger or it should be acquisition. Acquisition has to be there, and the merger may follow if we think that that's the right way to do it. Either acquisition or merger, MRPL being with HPCL is good for HPCL as well as for MRPL.
So your first quarter results were pulled down due to inventory losses. How has the second quarter fared, and can we expect some inventory gains coming in this quarter?
No, the Q2 is just got over 2-3 days back, and the numbers will be worked out. In the Q1 there was a reasonable inventory losses. We don't expect substantial inventory losses or in Q2 as compared to Q1, but the numbers are being worked out, and I expect Q2 to be better than Q1, but to what extent, that as the numbers are out, we'll see.
So what are the sustainable gross refining margins going forward for HPCL?
I think the $6 around will be a sustainable refining margin if the crude prices and the product price sustain and there are no inventory losses.
So what is the kind of petrol and diesel volume growth that you're expecting for the financial year 2018?
No, if you see the last month data, the September was quite robust, and if you see the first half year in this 17-18, I think the petrol has grown by 7 to 8% and diesel was around 3 to 4%. But if you see September month, it was a double-digit growth for both diesel and petrol. So going forward for the full year, I do expect that petrol should be a growth rate of 7 to 8 or maybe over 8%. Diesel should be around 4 to 5%. LPG will be double digit and ATF will definitely be double digit.
How do you see the movement in crude oil prices? Are the current level good for the company?
Yeah, if you see for last few days, the crude has been hovering in a range-bound manner between 55 to 60 range. 60 is a strong resistance point, and 55 does find a support base. So going forward, I do believe that the crude prices will continue to be in a sub-60 range, and it will be between 55 to 60. Of course, in recent time, it did pick up to 59 plus, but it came down, and going forward, it should be slightly softer. That's the way I think, but I don't expect it to be below 55 or above 60.
That will be all, sir. Thank you for joining us on the Zoom.
Well, thank you for that, Somit. And AirAsia India has no plans of bidding for the government's Udan scheme. The low-cost carrier, which flies to 16 destinations in the country, plans to stick to its single aircraft model, at least in the near future, says the airline CEO Amar Abrol. Speaking to Bloomberg Quint's Krishanu Mukherjee, Abrol says it's crucial to control cost if the company wants to break even by 2019. Krishanu starts off by asking him about AirAsia India's market share.
In the past year and a half, right, our market share has gone up from 2.6 to 3.7. Right. So the market share certainly increased by more than 100 basis points. The number of aircrafts have increased. July last year, June, July last year, we were 6 aircrafts. By December this year, we'll be 14 aircrafts. So that's about 140, 150% increase in the fleet size itself. 6.5 million passengers since inception. So we're certainly living up to our name of now everyone can fly. Right. We were 6 destinations or 8 destinations a year and a half ago. Now we service 16 destinations. So pretty much everything, we were 650 odd employees. We are close to 1,500 employees. Pretty much everything has doubled in the past year, right? So significant expansion in the past year, and we'll continue to go down this path for the next foreseeable future.
So where you are right now is by the end of December, you're talking about 14 aircraft, a fleet of 14. 16 destinations you're serving right now. 14 is dangerously close to 20. If we were to speak,
nicely close to 20.
Nicely close to 20. So if we were to speak about the next step of progression, which would be international operations, could you give us a lowdown on where you're planning to head with, say, international operations? When can we see AirAsia India, not Berhad, not the parent company, the Indian arm, flying overseas?
So certainly that will happen. That is a stated objective, stated strategy to go there. We are, as we get to 20 aircrafts, hopefully we'll get to 20 aircrafts by sometime Diwali next year, right? Same time next year. That's the aim, to get to 20 aircrafts. And then certainly we will fly overseas. That is also part of our ambition, part of our goals and stated objective. It is very natural for us to fly east.
Right.
Links in beautifully with the Prime Minister's objective as well, right? And we pretty much got a plug-and-play model, right? We are already present in, you name it, we are present there, right? Whether it's Malaysia, Indonesia, Thailand, Vietnam, Cambodia, Laos, Singapore, and so on and so forth, right? Pretty much every, and closer home, Bangladesh, Nepal, Sri Lanka,
right.
Everywhere AirAsia's brand presence is there. So certainly we will be going and plugging into the network that's already available. Kuala Lumpur being one hub, Thailand being another hub, which allows our guests to connect pretty much now everywhere, you know, all the way to Japan, China, Korea, Australia, New Zealand, and now all the way to the US as well.
But in terms of fleet models, are you going to stick to the A320, or are we looking at AirAsia maybe inducting wide-body aircraft also?
Right now, our game plan is quite straightforward, right? We're very clear that we want to be at the A320 model is what we're going to operate, 180-seater, flying range of anywhere between 4.5 hours, 5 hours, if you stretch it a bit. That's where we are focused, right? We don't want to get distracted by a different fleet type and so on and so forth, right? So very focused till the time we reach the 20 mark, certainly, and more importantly, till the time we become profitable. We're getting there. Month on month, we're getting towards profitability. Once we get profitable, once we start making our own money, and once we can fund our own operations without reliance on input from the shareholders and equity injection from the shareholders, then certainly we will look at, nothing is off the table, but right now very focused on where we need to get to.
I'd kept this for later, but now that you've got profitability, my next question is going to be on that. So as you've stated publicly, is that your target is 2019. You stated this a while back. Are you still sticking to that?
Absolutely. And we are on the right trajectory. So August we broke even, right? August being, everybody calls it a lean month. It's not a holiday month.
But you broke even on an operating basis.
We broke it even at EBIT level.
Okay.
So we broke even EBIT at an EBIT level, and there will be plus and minus months, but gradually the line is moving in the right direction.
By 2019, you should be profitable.
We are heading towards that.
You're on track.
Unforeseeable circumstances not anticipated, in the sense, obviously fuel is rising a bit. Some of the airport charges in India have gone up. The GST impact has to be sorted out. Barring all of these unforeseen circumstances.
Right, so confident in turning profitable by 2019. That's the management of AirAsia. Before we wrap, let's head across to Jayesh Kilnani to take a look at how the commodity markets are trading. Jayesh?
Navneet, let me start off with the energy space, because that is where we are seeing some bit of losses come about for the entire week. So despite the fact that WTI did gain about 1.5% overnight, but it is on track to close down for the entire week by about 2 odd percentage points. And now this is on the first time that in over a month that this is going to happen. The same case we are seeing with gold prices as well. So they are currently trading flat, but however for the week about 1% lower. But you know, the base metal space, that has done quite well. So the LME base metal index is currently trading positive and is on track to close the entire week with a gain of about 2.5 percentage points. Now today's segment, nickel has gained on the back of a UBS report, and other base metals too are trading with a positive bias. For the entire week, however, zinc and lead, these are the ones that have led the rally with a gain of about 5 percentage points each.
Okay. All right, Jayesh, thanks a lot for bringing us those details from the commodities market. But with that, it's a wrap on this edition of Countdown. Stay tuned. Agam Vakil and Shraddha Babla will be coming up with Thank God It's Friday, and they are interviewing Sridhar Sivaram of Enam Holding. Stay tuned for that.